It's Thursday night. You check the price, and your stomach drops. Silver, down almost 9% in a blink. A straight down candle, like the floor just vanished. And gold? Gold didn't fall the same way. It dipped. It steadied. It held up better. That's not normal. That's a message. Because when panic hits the precious metals casino, silver is the first table they flip. It's thinner, more leveraged, easier to bully. And tonight, they bullied it hard. Here's what the sleeping herd will say. Metals are risky. See? It's all a bubble. I told you so. But that's the surface story. The real story is darker. And if you're 55 plus, with retirement money on the line, you need this, like your future depends on it. Because it does. Silver didn't crash because it's useless. Silver crashed because the system is stressed. And when the system is stressed, they pull levers. Hidden levers, backroom levers. Most people don't even know those levers exist. We do. This is AG Reporter. And we're going to say the quiet part out loud. Because the next move they make won't be about silver. It'll be about you, your bank, your withdrawal, your spending, your pension, your freedom. And the people who wait for confirmation are the people who end up on the Titanic, still holding a dinner plate, while the lifeboats leave without them. Silver just dropped nearly 9%. Reports showed it sliding to around $76 an ounce after being near $90 earlier. That's not a little pullback. That's a trapdoor. Gold was also down, trading around $4,800 in that same wave. But it didn't get butchered the same way. That difference matters, because silver is the metal of pressure points. Industrial demand, investor demand, thin liquidity, high leverage. So when big money wants to shake out weak hands, silver is the easiest throat to squeeze. And here's the lie you've been fed for years. Markets are free. Prices are pure. It's all supply and demand. No, prices are policy. Prices are pressure. Prices are permission. When too many regular people start rushing toward hard assets, the system reacts like an immune system attacking a virus. It doesn't protect you. It protects itself. So silver gets slammed, not because the world suddenly has too much silver, but because somebody needed a message delivered, a warning shot, a fear bomb, to scare you away from the exit. Because gold and silver are not just commodities. They're lifeboats. And the corrupt system hates lifeboats. Because lifeboats mean you don't need them. Now let's talk about the mechanism, the hidden gears. You've heard the phrase margin requirements. Most people tune out. Don't. Margin is how they control the casino. A lot of traders don't buy metal with cash. They buy it with borrowed money. Leverage. They put down a small deposit and control a much larger position. Like walking into a casino with $1,000. And the house says, sure, you can place $50,000 worth of bets. Feels amazing until the house changes the rules. Because the exchange can raise margin, meaning put up more money now or get out. And when margin jumps, forced selling begins. Not selling because people want to sell. Selling because they have to sell. That's how you get waterfall crashes. Fast, violent, humiliating. The kind that makes retirees swear off metals forever, right before the next run. Reports around this move pointed to exactly that kind of pressure. Margin hikes and tighter conditions after wild swings. So the question is simple. Why now? Why crash silver here? Because the system is juggling too many knives at once. Debt, inflation, rates, bank risk, politics, war headlines, currency games. And the more fragile the system gets, the more desperate the control becomes. Now I'm going to say something that will make some people furious. Your retirement money is sitting inside a system that is mathematically impossible to fix. Not maybe, not eventually. Now. And I'm not asking you to take it on faith. This isn't a theory. This is math. The U.S. national debt is around $38. 5 trillion. And it's not sitting still. Roughly $1 trillion gets added in about 100 days. That's a government living like a gambler. Always doubling down. Always borrowing tomorrow to pay for today. So how do they pay? 2 ways. Tax it or print it. They can't tax enough without revolt. So they print. And printing doesn't look like a printer. It looks like stimulus, liquidity, facilities, emergency tools, different labels, same poison. And what does that poison do? It eats purchasing power. Slow at first, then all at once. That's inflation. Not the cartoon version, the real version. The version where your savings buys less every year, where safe bonds fall behind, where your pension check feels smaller even if the number is the same. And then comes the next lie. Don't worry, your bank deposits are insured. Is it? Yes, on paper. FDIC insurance is $250,000 per depositor, per bank, per ownership category. Comforting. Until you see the backstop. because the FDIC Deposit Insurance Fund was around $150 billion as of late 2025. But FDIC insured deposits are not billions, they're trillions. Around $10, $7 trillion insured by value in recent FDIC data. So you've got a fire department with a water tank, trying to protect a city made of gasoline. If the fire is small, they can handle it. One bank, two banks. But if you get a real crisis, a chain reaction, that fund is a cup of water on a house fire. And somebody always says, the government will step in. With what money? More debt? More printing? More inflation? So yes, they can make you whole in dollars that buy less. Congratulations. You got paid in shrinking paper, and that's why gold held up better than silver. Because gold is the old school signal. It's what central banks hoard. It's what history remembers when currencies forget. Silver is the people's metal. And the people's metal gets attacked first because the system wants the people to stay trapped. Now we move to the trap. This is where retirees get hurt the most. Not because you're reckless, because you're trusting. You trust the rules will stay the same. You trust access will always be there. You trust a bank will always let you withdraw. You trust a card will always swipe. Imagine this. It's a Saturday morning. You try to fill up gas, your card is declined. Not because you're broke, because a temporary verification is happening. So you drive to the bank, long line, tense faces, a security guard at the door, a sign, cash withdrawals limited. You tell yourself it's a glitch, then you open your banking app, a new message. Due to increased volatility and public safety measures, transfers are delayed. Delayed. That word is how freedom dies. Because in a real crisis, they don't confiscate first. They freeze, they limit, they delay. They turn your money into a permission slip. And here's what they never teach in school. A bank deposit is not your cash. It's a loan you gave the bank. They owe you. And when everyone wants it back at once, they can't pay. No bank can. That's why limits appear overnight. That's why the tone changes from customer service to public safety. And that's where the next move comes in. Digital control, CBDCs, central bank digital currencies. Some people hear CBDC and shrug. They think it's just a faster dollar. No, a CBDC is a programmable dollar, meaning it can be tracked, limited, timed, approved, denied. It can be made to expire. It can be restricted to certain purchases. It can be shut off with a keystroke. And if you think they'd never do that, remember this. They already showed they can shut down society. They already showed they can change rules overnight. They already showed they can redraw the lines, then call you crazy for noticing. So picture retirement under that system. Your pension check arrives, but it's tagged. You can spend this only on approved categories. You want extra fuel, extra groceries, extra medicine, extra anything that looks like independence, denied. You want to pull out cash for an emergency, denied. You want to help your family with a wire transfer, delayed, reviewed, questioned. You want to buy metal, flagged, and then it hits you. In their system, your money isn't yours. It's a leash. Now add another danger retirees understand. Rule changes. They don't need soldiers. They need paperwork, new reporting rules, new thresholds, new taxes, new emergency measures. All sold as temporary, all built to last. And here's why the silver crash matters. Big volatility gives them cover. When markets swing wildly, the public begs for stability. And the government steps in with solutions. Solutions that always mean more control. So when silver drops 9% and people panic, they don't just see a chart, they see an opening to scare you back into the herd. Now listen closely. This is the moment where most people do the wrong thing. They say metals are too crazy. They run back to safety. But what is safety inside a corrupt system? A promise, a screen, a number in an account. And a promise is only good until the promiser is desperate. So let's talk about the exit. Not the get rich exit, the survival exit. Physical gold and physical silver are not about profit. They're about options, freedom, survival. Because physical metal is a bearer asset. If you hold it, you own it. No middleman, no counterparty, no permission. And that is exactly why the system fights it. Because the system runs on counterparty risk. Counterparty risk is simple. The person who owes you can't pay you or won't pay you. Your bank deposit, counterparty risk. Your brokerage account, counterparty risk. Your pension fund, counterparty risk. Your guaranteed annuity, counterparty risk. It's all IOUs. And IOUs are fine until the day everybody cashes them in at once. That's a bank run. That's a liquidity crisis. That's when doors lock. But physical metal, no counterparty. It doesn't need a network. It doesn't need an app. It doesn't need permission. It just exists in your hand. That's why I call it being your own central bank. Because central banks don't hold their wealth as an app. They hold reserves, hard assets, gold. And you should be thinking the same way, especially in retirement. Not because you're paranoid, because you're awake. Now, does that mean silver can't drop again? No, silver is volatile. Always has been. Silver is the speedboat. Gold is the battleship. The speedboat gets tossed in rough water. But if you understand what you own, you don't jump overboard in a storm. You hold on tighter, because the storm is proof the ocean is real. And here's why gold held up better. When leverage unwinds, the thinner market breaks first. Silver breaks. Gold has deeper liquidity, deeper pockets, deeper history. Silver is easier to smash, so they smash it. They trigger stop losses. They force liquidations. They shake the tree until the weak fruit falls. Then they quietly pick it up cheaper. Oldest trick in finance. And retirees are the easiest targets. Because you're living life. You're not staring at futures at 3 a.m., so they try to scare you with a sudden red candle, hoping you'll abandon the very thing designed to protect you. Now let's get practical. If you're sitting on a lifetime of savings, you have one job. Protect purchasing power. Protect access. Protect options. Not chase hype. Not gamble. Not trust politicians. Protect. So ask yourself right now, if the banking system hiccups, how much of your wealth is instantly trapped? If new rules hit, limits, delays, safety measures, how fast can you pivot? If your dollars buy less next year, and the year after, what is your savings actually worth? Because inflation isn't a headline. It's a slow theft. It doesn't kick your door in. It just empties your pantry one can at a time. And while you feel it, officials smile on TV. They say it's cooling. They say it's under control. They tell you to stop noticing. That's why this is us versus them. Us, people who worked, saved, planned. Them, people who print, borrow, spend, and then blame you for feeling squeezed. Gold and silver are how you reduce that theft. Not perfectly, not instantly. But historically, they've been lifeboats when paper burns. Now, I'm not telling you to put every penny into metal. Adults diversify, but you should understand this. The people running the system diversify too. They diversify out of risks they can't control. And the risk they can't control right now is confidence. The system runs on confidence, and confidence can evaporate overnight. So when silver crashes 9% and gold holds up better, don't treat it like a random day. Treat it like a signal flare. Let me give you a picture you can't unsee. In 2008, people learned something the hard way. Banks don't fail like a movie. They don't explode. They restructure. They merge. They stabilize. And in the middle of that polite language, ordinary people discover their money is trapped behind a desk in a policy. Then, years later, in places like Cyprus, depositors learned another word, bail-in. Not a bailout, a bail-in, meaning instead of saving the bank with government money, they reach into the bank's own customers. They haircut deposits. They convert part of your money into bank shares. They tell you it's for the greater good. That's not ancient history. That's a modern playbook. So when you hear, it can't happen here, ask yourself, what's the difference? Debt is bigger, confidence is thinner, and the tools are more invasive than ever. Now, here's why silver gets hit first. Silver sits at the crossroads of real life and paper games. Real life needs silver for industry. Electronics, solar, medical, manufacturing. But the paper market treats silver like a chip, a leveraged chip. And when the paper side panics, the tail wags the dog, because in the paper arena, you can create claims, stacks of claims, promises on top of promises. And when those claims start to wobble, the fastest way to regain control is to smash the price, hard, fast, publicly. Why? Because a smash does three things. First, it triggers stop losses, automatic selling, robots dumping contracts without emotion. Second, it forces margin calls. People who were fine at dinner wake up to a notice, add cash by morning. Third, it breaks morale. It makes normal people say, I'm done. It turns lifeboats into punchlines. That's the real target, your confidence. Because if you lose confidence, you hand them your freedom. Now I want you to picture the next stage. Imagine this. Your pension fund sends a letter, not a big dramatic letter, a calm letter. It says, due to market conditions, adjustments may be required. Adjustments, that's a polite word for less. Then your healthcare premium rises again, your property taxes rise again, your grocery bill rises again, and you do the math at your kitchen table. The same table where you planned retirement. And for the first time, you say it out loud. I did everything right, and it still isn't enough. That's when people panic. That's when they sell the wrong thing. That's when they chase the wrong promise. So here's the question that matters. Do you want your retirement to depend on a system that survives only if you stay calm and obedient? Or do you want at least some of your future anchored to something that doesn't need permission? because that's the difference between paper and metal. Paper is a claim, metal is a possession. Paper can be gated, metal can't. Paper can be settled in cash equivalent. Metal is the thing itself. And this is why gold behaves differently. Gold is treated like money by the biggest players on earth: central banks, sovereign funds, institutions that plan for decades, not headlines. Silver is treated like a battleground: more retail participation, more leverage, more emotion. So it gets hit harder on purpose. So when you see silver down 9% and gold holding up better, ask the uncomfortable question: was that a market move or a control move? And here's another question. If they can scare millions of people away from hard assets with one violent candle, what else can they scare people away from when the real crisis hits? That's why we don't follow the herd. We watch the exits. We look at the math. We prepare while it's still optional, a warning from the ocean. Because storms come fast, and the only people who sleep through storms are the people who wake up wet. If you want to survive what's coming, subscribe to AG Reporter. Not for entertainment, for awareness. Because the herd gets the headlines, we get the warnings. And I'll leave you with this thought, one you should sit with tonight. When a system has to keep changing the rules to stay alive, it's not stable, it's cornered. And cornered things do dangerous things.